All right, everyone, welcome to join back. Just now there's some issue with the mic, and also I actually ended the broadcast earlier. Okay, so we are starting in about 1 minute's time. If you find that you have any friends or any of your agents, right, like to know more about refinancing and what are the common mistakes that so-called customer have made, you can feel free to share this link on your Facebook. So appreciate that. We are starting soon. Hello, everyone. Thanks for waiting. So right now is 8:16, so 1 minute, so-called 1 minute late. Okay, so we will start to go into our topic. So our number of viewers is still increasing. So if you have, you find that anyone need to know more about this topic, right, and this topic may be helpful, just help me to click the share button to any of your friends and family, and you can share on your page as well. Thank you so much. Okay, so right now talking about refinancing, right? This topic is a lot of people keep asking me because being a property agent myself, right? A lot of time I'll have clients ask me about this topic, especially during this pandemic period. Hold on. Actually, I can't see who is joining me. By the way, I'm quite new to this software. I can't see who is actually joining me. Okay, just give me a moment. Hi, Ron. Okay, Ron, thank you. Karen, thank you. Oh, Sean is joining. Okay, thank you, Sean. Okay, so a lot of people asking about this topic. So we know that we have two options basically for our mortgage home package. So it can be refinancing, also it can be repricing. So what are the difference? For repricing, right, we actually so-called we do the financing within the bank itself. For example, from the bank A, so we so-called we sign a new package with bank A again. So it usually will be a lower interest rate. So the other way, we actually go to other bank, try to bargain for a better rate. So a lot of time we can actually get a better rate from some other bank. Or depend on your negotiation. Okay. So today's topic, right, it cover both. So if let's say talking about repricing and refinancing, right, a lot of buyer, so-called our owner, right, usually will ask whether it's free, whether any cost involved, and a lot of time banker actually offer different kind of package. So sometimes they will have different kind of technical jargons. Like for example, they have this term called spread. Then they can have this term called cyber. Then sometimes it's a 3 month cyber. Sometimes it's a 6 month cyber. Then it can have this term also called clawback. So sometimes they are being confused. So honestly speaking, last time being a property owner myself, right? When I do refinancing for my property, I also got confused by all the different terms. And sometimes the rates, right? I'm not sure whether a lot of people will know. Within the same day, even you check the cyber rate within the same day, right? You might get a different rate. Hi, Desmond. Thanks for coming in. Okay, so we might get different kind of rates for the cyber package. So I actually like to so-called put up this question to one of the banker that I work with very often. Her name is Melissa. So later I'll invite her in. So before we let her in, right, just let me talk a little bit more. So So you guys don't mind, yeah? Hope you guys don't mind. Okay. All right. So what are the benefit for refinancing? So a lot of people know the main thing, so-called the main reason that we are doing refinancing, right, is actually we want to get lower interest rate. So at the same time, right, we want to reduce the so-called interest amount that we are paying. But at the same time, right, if we are doing refinancing, actually the principal amount that paid during the same period will actually increase. It actually means, right, during next time when you are after 3 years, 2 years, 3 years, or even 4 years down the road later, when you are doing this, right, your loan amount actually reduce more significantly when you do a refinancing. But at the same time, right, when you do this, we can actually see the drop significantly in the mortgage principal and interest. So it causes the whole payment drop by a lot. So at the same time, there are some owner actually during refinancing, they do a change in the loan tenure. It can be stretching of the loan tenure, but some of them, they actually choose to shorten the loan tenure because being the same $3,000, right? Last time with 2% interest, so my $3,000, I'm paying $3,000. But when the interest dropped to 1.5%, right, I can actually pay $3,000 with the 1. For example, when the interest drop, right, my principal amount will be covered even more. So to show very clearly what I'm saying, right, I actually have one example. My landlord actually just did it recently. We have 21 people with us. Thank you so much. Okay, so I want to show this example, which my owner just did it because my owner is in overseas. So a lot of time they actually don't really follow up about all this interest rate topic. So recently I just text them asking them that whether they are really keen because their rental is about $3,000 per month for that property, about 1/million. So later in that example, right, I'll show how significantly this interest rate drop can actually help them. So let me do a screen share now. Okay, can everyone see my screen? If let's say can you give me a thumbs up? Or maybe you put okay inside the chat. Oh, Sean have some question. Okay, what's the timeline like? Okay, this one later we address this question. Okay, so everyone can see my screen, right? Okay. Karen, what's clawback? Later we address that. Okay, so you guys can see the screen. So this is for my that particular owner. Their outstanding loan with the existing bank, right, is about 785,000 at this moment. Okay, so because the buyer is a certain age, so that's why their loan tenure is only about 20 years instead of a normal 30 years period. So throughout the years, right, they actually didn't do any repricing or even refinancing. So right now, their interest rate during this period is actually 2.83% with a certain bank. Okay, so the monthly installment is about $4,200. So being a property owner, right, we know that a lot of time we actually want to cover our this principal repayment or even the monthly installment by our renter. So obviously 3,000 versus 4,002, right? It doesn't cover anything. But then when we break this $4,200 into two different parts, which is the principal and also the interest, right? Then we can see over this column. I did a calculation for them. Actually, their principal amount, right? They paid to the bank is 4,002, but the interest itself is actually $1,800. So we can do a more detailed in-depth calculation, see whether this investment is a good investment. So for example, $1,800 interest, right, plus the maintenance fee for that particular project is about $300. So actually it's $2,100. So at the same time, right, they are paying property tax of about $200. So add out, right, is about $2,300. End of the day, they only take back about $700. So when they do the refinancing, right, which right now the package a lot of time we can get 1.4% or somewhere around there. Okay, so I didn't want to overcommit. So I told them, if today we go for a fixed rate package, right, which quite often we can get 1.5, around 1.5% nowadays. So with the same amount, we can actually have a different monthly installment from 4,002, we dropped to $3,700. At the same time, right, the most interesting thing, because we know that when we are paying, we are so-called getting the mortgage from the bank, right? That's why we serve the interest. So the interest that we are paying, right, is only less than $1,000 compared to before. Every month is $1,800. So this is $900 different. Then we know that as a property owner, right, today we are taking $3,000 rental. This $900 become very significant. So as a landlord, right, this interest cost is something that we cannot ignore. So that's why for my owner, right, when they switch the whole package, the total calculation and the saving, right, over the 3 years is about $30,000 that they save. So that is the calculation that I did for them. Then the other thing also very interesting. A lot of time people will be confused. For example, they think that, oh, now my loan tenure is 30 years, so I should be making it 20 years. So we can take a look whether it actually have a lot of difference for the interest rate. So for example, right, now the loan tenure is 20 years. We know that the interest pay for this is about 1,008. So here is about 975. So when I change to 30 years, right, the interest rate, I mean the interest amount that this owner pay, right, it doesn't change a lot. The saving, right, compare for the first 3 years is also very similar. So this is one of the misconception. Just share with you guys on this. So if any of you like to have this calculation, right, for us, our agent, a lot of people will have this. So if you like to have this copy, right, I can actually share with you. Okay. Yep. Okay, just now the sharing screen actually cover the comments. So there are some people saying that the difference is a lot. Yes, it's really a lot. Okay, so we have 24 people with us. So so after I talk so much, then I think I need to invite the professionals, which is the banker, to come in. So this banker, Melissa, right, since my day one in my real estate career, she has been supporting me since the day one. So I remember, right, during my very, very first deal for my private property, so I actually almost forget certain thing, very important. Then the deal almost fall into some issue. Then she was traveling back from overseas. Then somehow she managed to get her colleague to help me, and she's one of the very efficient persons. So I would like to invite her in and introduce her to you guys. She's Melissa from OCBC Bank. So I will put her in. Okay, I'll let her come into the studio. Hello, Melissa. Okay, hold on.
Yo.
Hey, yes. Okay, I can hear you.
Hello. Can you hear me?
Yes.
Hello. Nice to meet everyone.
Yeah. Okay, we have 22 audience here.
Okay.
I can see the questions start to come in. People are asking many different questions. So I think maybe you share me first lah. I think a lot of time people are very curious, like property agent and bankers during these periods. Is it like become busier or what?
I would say in general, of course, there's slowdown. Definitely, I would say the property market in general slowed down. Lead wise, also I would say it's much lesser. Phone call much lesser also. But I think it's more of during the initial phase of the circuit breaker, everyone tried to to climatize to a digitalization platform. So in the past, like just I would say about February period or March period, everyone was doing, at least for myself, we were doing like hard copy paperwork, but now everything we're doing on the computer. So in fact, actually because of COVID, now our digital process has actually quickened. The digital application is actually easier for the client. We don't really need to meet the client face to face. We can do a digital application. So there are positives from this whole situation. The negatives are that probably, of course, there's drop in leads and definitely drop in the property market in general. I would think so. Yeah.
Okay. At least I still give you inquiry.
Sorry?
At least I still give you inquiry, right?
Yeah, of course.
I'm still actively working. Yeah, that's why today, this timing, we are still doing our live here.
Correct.
Okay. Yeah. So, Melissa, so I mean, for us, even property agent, right? Sometimes we also have some confusing part about this refinancing, repricing. So of course, we are not the subject expert. You are the one, man. So can I just check with you? Just now I was reading through the question, right? People are asking like when, of course, it's very attractive, man, but people also want to know like what's the timeline like, and also based on your experience handling the case, right? What kind of mistake that usually people will make for the refinancing?
Okay, you mean for customers, what mistakes they might encounter when they refinance? So, I think they will need to first of all find out, very importantly, for refinancing. That means you want to change from bank A to bank B. You want to change your housing loan from bank A to bank B. So, very important thing to take note of is first, are you out of the lock-in period of your existing bank? And what is the clawback period? Is there any clawback for your existing bank? Clawback meaning like previously when you signed a loan, was there any cash reward they gave you or voucher? And then maybe there's a clawback period. Within a certain time frame, you have to stay in that bank. If not, the bank will require you to pay them back the cash reward or voucher that they gave you. So these are the two important things to take note of: lock-in period and clawback period.
Okay, means the bank must earn certain amount of money before can let them go lah.
Correct. So I would say is a standard clause whereby cash reward is always 3 years clawback period. So typically the client, if they have stayed at least 3 years in the bank, most lock-in periods is not more than 3 years. So if let's say the client has been with the existing bank for more than 3 years, they can safely assume that they are already out of the lock-in period. They can change bank with no penalty.
Okay.
Yeah.
So if let's say today I have this client, right, that actually with for example OCBC bank for 3 years, right, then the interest so-called increase, then if let's say they like to for example do a repricing to your bank, right, to OCBC bank, is there any admin fee or things that people need?
Yes, so repricing, there's always a fee of at least $500. Sometimes it can be up to $1,000 restructuring fee if let's say they are restructuring the loan. So there is a fee if you're going to stay within the same bank. The funny thing is that if you actually change bank, you might find that the fee might be lower than if you were to stay with the same bank. So it's actually quite funny. So most savvy clients, you see them switching banks every, I would say 3 to 4 years, depending. Yeah.
Okay.
So repricing within the same bank, typically the fee is at least $500. If you're changing bank, the new bank, they want your loan, so they're willing to give you cash reward or give you a voucher to entice you to come over. Most of the time, the fee to go over to a new bank is close to zero.
Understand. Okay, so they actually cover back by the clawback portion lah, but at the same time they also offer you the certain rates that maybe the buyer want, so-called the owner one.
Yes, correct.
Okay, then if for example, sometimes we have so-called, I have some investor owner lah, so they are also quite smart. So they will ask me, for example, today I go and find Melissa to do a refinancing. Okay, so I refinance to OCBC already, right? For example, is a very good rate, 1.4 something, maybe 1.45, I don't know. For example, 1.45. Then they are saying, right, maybe now the market is it's not moving that fast. Then they want to sell maybe end of the year or maybe early next year. Okay, so now problem come. I do a refinance with you. Then I take your clawback. So-called take your cash rewards. So I shift to your bank. So I take all the benefit already. So is there any penalty if I sell next year?
Okay, so with regards to selling, you have to take a look at the terms and conditions clauses offered in the interest rate package that you're signing up. If typically, I would say if you're going for a no lock-in or a 1-year lock, depending on what kind of package it is, the penalty, the bank will usually help you waive it off as long as your new purchase, you come back to the same bank and you apply a loan amount that's higher than your previous loan amount that was outstanding. So the penalty due to sale, if it's like a 0-year lock or 1-year lock package, usually they will waive off the penalty. But if you're going for a 2-year fixed rate or a 3-year fixed rate package, typically within the lock-in period, there'll be a penalty if you sell the property.
Okay.
Yeah. So if let's say your client wants to refinance now and he has the intention to sell his property maybe 6 months to a year later, I would recommend for this particular client to go for a no lock-in or a 1-year lock-in package.
Okay. Yeah, so I think it's also quite important that clients sometimes they need to be clear with their intention. Because I know that some of the owner, right, they actually do a refinancing because they know that now the rates is very low. So they actually go into refinancing. Then after that, then they start to think whether they should be selling later on. So a lot of time when they switch the bank, right, I mean, I hear from what you're saying, right, when they switch the bank, they should be also at they should be they should be at the same time, right, also make it clear whether they have intention to sell. So if let's say they have this intention, then better they inform the agent or maybe the so-called the banker itself.
Yes, correct. So it's very good to I think that's more of a job of the agent and the banker. They will ask, I mean, clients, they are laymen, they usually don't really know what questions to ask. So usually what we will ask is, are you already locked out the lock-in period of your existing loan? Is there any clawback? Do you intend to sell within the next 1 to 2 years? And then from there, we can decide which package is actually best suited for our client.
Okay. Good. I think this one is very clear. Yeah, I think Melissa is explaining very clearly. Then, I mean, in the comment, right, if this is good, right, maybe you can give Melissa a thumbs up or something. You can say she's good, she's perfect or anything. Just make her happy because this time, 8:30, then she come into this live to help me to do all these things.
Yeah. No worries, no worries.
Yeah. Okay. Then I'm actually scrolling through the comments. Okay. Let me try whether I can do this. Oh yeah, can. Okay. So Sean is asking, because I'm first time using this software, so I think quite interesting. Okay. So he's asking, right, 1 month SIBOR versus 3 month SIBOR. Why some bank give different SIBOR rates? Yeah. Just how I roughly mentioned. So maybe you can explain this.
Okay, so I would say, so different banks, they will have different SIBOR type of packages. In general, what we used to offer was 1 month SIBOR, 3 month SIBOR, and 6 month SIBOR, which is basically almost all the SIBOR packages. So this is what OCBC used to offer in the past. 1 month, 3 month, and 6 month. There's also 12 months, but no banks are offering 12 months SIBOR package. So now what you see in the market is typically 1 month SIBOR, 3 month SIBOR, and 6 month SIBOR. Most common one is 1 month SIBOR and 3 month SIBOR, which everyone knows. So why do certain banks only have 1 month SIBOR? Why certain banks only have 3 month SIBOR? Why certain banks only offer 6 month SIBOR? The reason is due to the bank's portfolio of loans. So in the past, I would say maybe around 2 years ago, OCBC used to offer 1 month SIBOR packages. We no longer offer because the 1 month SIBOR pool has already reached the maximum quantum. So because due to the bank's risk, they can't have most of their portfolios having a 1 month SIBOR package, which is why the bank will totally remove it off the packages being offered. Therefore, now if you come to OCBC, the loan packages that we are offering is 3 month SIBOR and 6 month SIBOR only. In fact, 6 month SIBOR is so unpopular because it's much higher than the 3 month SIBOR currently. So 3-month SIBOR is our most popular package, which most banks, if you go and compare around, all are offering 3-month SIBOR package. In fact, there are some banks that are offering, they don't even offer SIBOR package because now the SIBOR is low. And if you actually check with, so OCBC is a local bank. If you check with foreign banks like CIMB, Standard Chartered, or even HSBC, it's typical for those banks to offer a SIBOR package, either 1 month or 3-month SIBOR package, and you will notice that there is what they call floor rate. So they impose a floor rate on top of the SIBOR package, meaning, for example, now 1 month SIBOR is at 0.54%. They impose a floor rate of 0.8%, saying that as long as SIBOR is 0.8% and below, they will take the SIBOR at 0.8%. So there are some clients now who took up a CIMB package about, let's say, 1 or 2 years back. Now, although the 3-month SIBOR today is at 0.54%, CIMB recognizes it at 0.8%. So they are missing out on that gap. Yeah,
Okay.
so that's the main difference between local banks SIBOR packages and foreign bank SIBOR packages. So you have to read the terms and conditions carefully when you sign up a SIBOR package. It doesn't mean like OCBC, okay, let's say local bank spread is at, example, 0.8%, whereas another foreign bank spread is at 0.6%. It doesn't mean that the foreign bank spread is definitely a better package.
Okay. Okay. Well, it sounds a bit cheap to me. Yeah, that's why need you guys like bankers sometimes to explain to our client, because sometimes when we try to explain to our client, right, they also feel that it's like missing some way a bit here and there. Yeah. Okay. So let me see whether there's any other question other than just now.
If you're asking effective 1 month and 3-month SIBOR today, right, what's the main difference? I would say, of course, 1 month SIBOR is always lower than 3-month SIBOR. But now the difference between the 1 month SIBOR and 3-month SIBOR is almost less than 0.2% difference. Yeah, so 3 months, whether you take 1 month or 3-month SIBOR, to be honest, it's not really much of a difference. It depends on whether or not you're willing to take the risk with a 1 month SIBOR, because 1 month SIBOR means it's more volatile. Every month your rate will change. 3-month SIBOR means that every 3 months then your rate will change.
Yeah, 1 month SIBOR is definitely more like a roller coaster,
Yeah.
right?
Up and down, yes, correct. Every month you will see.
Yeah.
These 3 months SIBOR in a year only revise 4 times. Doesn't feel so crazy.
So what? Okay, so what is kind of package that right now OCBC is offering? I think this is a question that a lot of people like to know. I mean,
so what we offer is we offer a fixed rate package for resale properties, 3-month SIBOR package for resale and uncompleted properties, only private properties, and then for HDBs we offer fixed rate package and floating rate package. So it depends on the type of property, whether it's private, HDB or EC, and whether it's a resale or completed. We will offer different types of packages accordingly. Yeah. So broadly, I would say it's either going to be fixed or a floating rate. Yeah.
Okay. Is there a rough range that you can share about the interest?
Current rates right now for fixed is as low as 1.5%, fixed 2 years. If it's floating, it's as low as 1.35% effective all-in rate. Yeah, for the first year.
I think that's quite low, yeah.
Correct.
Then is it true that, like, for example, right now is a low interest rate environment, so that's why the SIBOR also being so low. So our customer, I mean, few days ago, my customer also asked me whether they should just wait, or for example, there are those more conservative type that actually own multiple property. So they're asking me, right, whether they should go for the fixed rate package now, since the fixed rate package, right, looks quite reasonable. It's like 1.5%. So they don't want their investment portfolio, their spending is like fluctuating. So is it good that during a low SIBOR period, right, then I quickly log into this fixed rate package?
Actually, personally, I feel that with the current market situation, 1.5% fixed is actually probably as low as it can get already. I don't think in the history of the bank has it ever been this low, at least for the past 5 years. 1.5 fixed 2 years, it hasn't been this low, at least in a very long time. Of course, there was this short period of time when Citibank was offering 1.35%, but that is, I think, only just like last month only. They no longer offer already. So, other than that period, 1.5 fixed 2 years has been probably one of the lowest fixed rates that has been offered. So, if you're asking me, 1.5 fixed for housing loan for 2 years is not bad. If you're going to go for SIBOR, it is slightly lower now, 1.35 all in. But you have to take a look that's assuming because now the SIBOR is low. Who knows in the next 6 months to a year to 2 years' time what the SIBOR might be. If SIBOR picks up, it can really shoot up very fast. And if you're in a lock-in period of the loan, you have no choice. You have to pay what the bank is making you pay based on the SIBOR rate. And right now, I would say that the SIBOR spread is at around 0.8% to 1%. That is considered high in my opinion. In just about, if you signed up probably a package like 5 or 6 months back, SIBOR didn't drop that much at that point of time. The SIBOR spreads was as low as 0.2%. So you are now paying at least 0.6% higher than those clients who sign up 6 months back. So 0.8% spread now for SIBOR is not considered a low spread. I would rather you go for a fixed rate package if you ask for my opinion.
Okay. Yeah, it's a good one. I go and talk to my client again. I think they haven't signed.
Yeah, but of course, ultimately, like I mentioned previously, it depends if your client is intending to sell in the next 2 years. If he's intending to sell in the next 2 years, then don't go for fixed rate. Go for SIBOR. Because in the short term, he can pay the low interest rates and then once he sell, he can redeem the loan with lesser penalty. So that's better rather than you go for a fixed rate package. So it really depends if your client intends to sell and if he intends to partially pay down the loan.
Okay, got the point. So if let's say they intend to sell, then I should be telling them to go for
floating.
Floating, yes. Okay, good. Wait, let me see. I think there's someone asking question. Okay, wait. Okay, so this one is interesting. Okay, so Eric is asking, right, if I have a 3-year fixed 3.5%, so anything he can do now?
Okay, so it depends if you are still within the lock-in period of your loan. If you are still within the 3 years fixed period, then I would say most of the time, yes, you're still within the lock-in period. If you were to cancel the loan, there will be breakage, what the bank calls breakage cost, which is typically 1.5% of your outstanding loan amount. At 3.5% versus, let's say, if you hop to a 1.5% rate, the difference that you save, you have to include in the 1.5% breakage cost and see if it's really worth it. But I would say most of the time in general, no, it will not be worth it unless even if your loan amount is big, no, it won't be worth it. You will have to still continue paying until the fixed rate period is over.
Wow, even with the 3.5% to 1.5.
Yes, I would think, yeah, it won't make it depends on your loan amount and the current loan tenor, but in general, no. Unless it's reaching 4%, then it will probably be worth it to cancel the loan in a sense. Because you're paying breakage costs, you have to upfront pay 1.5% of your loan amount as penalty to change package.
Okay.
So yeah, if it's 3 years fixed at 3.5, I don't think you will still make any savings if you were to change your package.
Okay. Yeah. So Eric, I hope the question is answered.
But I can always do a comparison if you have existing loan with such situation. Just give me your loan amount, loan tenor, and then I can do the comparison for you already.
Okay. Yeah, this is Melissa number. It's correct, right?
Yes, correct.
Then sekali talk so long, then it's the wrong number, then call the wrong person. Okay.
Yeah, you can call me if any further inquiries.
Okay, let me see whether there's any other question. I see some of my old clients inside.
Oh, hello.
Yeah, yeah. Justina, thanks for joining. Okay. Okay, so I have seen through the question. I think there's nothing much, but this one I think I must show. This one is very good.
Mm.
Perfect, Melissa.
Oh, thank you.
Yeah, Justine is saying that it's perfect. So I think your explanation is very clear. If there isn't any other question, right, then I think my colleagues down here or any customer, right, if let's say you're keen to find out more about the mortgage loan, then definitely Melissa is someone that I will strongly recommend. So you can look for her. I think you can text her directly. But if you have anything about property related topic, right, you can also look for me or about refinancing, whether you should be doing the refinancing. So we have been working very closely with bankers. So people like Melissa. So they always give us very valuable advice. So if let's say there's anything that we can work on that, right, then we try to discuss on that. Okay, let me see. Yeah, I saw people saying no choice, good lesson, learn from refinancing. Okay, so thank you everyone. I think if there's nothing to add, Melissa, do you have anything want to add before we actually end the session? Okay, hi Morgan, thanks for joining. Okay, you have anything to add, Melissa?
Not for now. If you have any inquiries, just feel free. You can drop me a WhatsApp. Just say that you knew me from Edwin's video conference. Yeah, and then I will usually answer your inquiries quite promptly lah. So I will get back to you as soon as possible.
Why you say like that? Oh, because quoted my name, so will be faster, right?
Yes.
Yeah, but anyway, yeah, just for everyone information, Melissa has been so-called. She's the one, right? A lot of time, when I really need very immediate help, I will always call her, no matter how late it is. So even she can actually do for me, right? For the in principle approval for loan, just within few hours. I'm really amazed. I thought it's really amazing. She's really fast on that. Yeah. So thank you, Melissa. So if no other question, then we will end this session soon. Now, okay. So we end the session now. Okay. Thank you, Melissa. Thank you.
Okay. Thank you. Bye.
Okay. Thanks, Melissa. Okay. So everyone, thanks for joining. You hold on. Yeah. Okay. So thanks everyone for joining. We are more or less finished our today live broadcast. So if you like my topic and like to have so-called if you like to hear more about my life, right? Although today is the first one, if you like to hear more about property related topic, right? You can hope you can subscribe to my page. Then you can like my page. Thank you so much. Bye bye. Thanks, Lim Lee. Okay, thanks, Ron. Bye bye. Justin, bye bye. Thank you. Bye.